This is gonna blow your mind. A trade war erupts when nations clash over international commerce. They engage in a tit-for-tat exchange of tariffs and trade barriers. These protectionist measures aim to shield domestic industries from foreign competition. However, the consequences often ripple far beyond their intended targets. Trade wars can disrupt global supply chains, driving up costs for businesses and consumers. Inflation rears its ugly head as prices for goods and services surge. Market volatility becomes the norm as uncertainty grips investors, leading to wild swings in asset prices. History is replete with examples of trade wars and their devastating consequences. The Smoot-Hawley Tariff Act of 1930, for instance, exacerbated the Great Depression. More recently, the US-China trade war of 2018 to 2019 shook global markets and hampered economic growth. In times of such turmoil, investors seek refuge in safe haven assets. These assets are expected to retain or even increase in value during periods of economic stress. Gold, with its long and storied history, has traditionally held the crown as the ultimate safe haven. Gold has been a store of value for millennia. Its scarcity, durability, and universal appeal have made it a prized possession across cultures and civilizations. In times of economic uncertainty, investors flock to gold as a haven from the storm. During periods of high inflation, gold has often held its value or even appreciated. This is because gold is a tangible asset with intrinsic value, unlike fiat currencies, which can be printed at will by governments. When central banks resort to printing money to combat economic downturns, it can erode the purchasing power of fiat currencies, making gold an attractive alternative. Throughout history, gold has proven its mettle as a safe haven during various crises. During the 1970s, oil shocks and stagflation, gold prices soared. Similarly, the 2008 financial crisis saw a surge in gold prices as investors sought safety amidst the market turmoil. Gold's resilience during times of crisis stems from its unique combination of factors. Its limited supply, inherent value, and historical track record make it a reliable store of value that transcends national borders and political whims. Bitcoin, the enigmatic cryptocurrency, has emerged as a contender for the safe haven crown. Proponents tout it as digital gold, highlighting its decentralized nature, limited supply, and potential to act as a hedge against inflation. Unlike traditional currencies issued by governments, Bitcoin operates on a decentralized blockchain network. This means no single entity controls it, making it resistant to government interference or manipulation. Furthermore, Bitcoin's supply is capped at 21 million coins, ensuring its scarcity. However, Bitcoin's volatility raises concerns about its suitability as a safe haven. Its price is prone to wild swings, making it a risky proposition for risk-averse investors. Moreover, Bitcoin's regulatory landscape remains uncertain, with governments grappling with how to classify and regulate this nascent asset class. While Bitcoin shares some similarities with gold, such as its limited supply and perceived independence from traditional financial systems, it is still a relatively new and untested asset. Its long-term viability as a safe haven remains to be seen. As trade tensions escalate, investors are left pondering the best course of action. Should they seek refuge in the time-tested haven of gold or embrace the digital allure of Bitcoin? The answer, like most things in finance, is not so simple. Gold's long and illustrious history as a safe haven, coupled with its tangible nature and intrinsic value, makes it a compelling choice during times of economic uncertainty. Bitcoin, on the other hand, offers the allure of decentralization, potential for high returns, and a hedge against inflation. But its volatility and regulatory uncertainty make it a riskier proposition. Ultimately, the decision of whether to invest in gold, Bitcoin, or any other asset depends on your individual circumstances, risk tolerance, and investment goals. Thorough research and careful consideration are essential before making any investment decisions. Please subscribe to our channel for more insightful content on finance and investments.